Good morning, I'm Angie Austin with Oil and Gas 360, and we're at the 2015 Enercom Oil and Gas Conference here in Denver, the 20th year of the conference, and I may have someone with me here who might have been to all 20 of them. We'll find out in a minute. Frank Lodzinski, he is the president and CEO of Earthstone Energy Incorporated. Welcome, Frank.
Well, thank you.
So have you been to all of them or many of them?
Well, don't tell Greg Barnett, but I skip like every third one or something like that, but we don't want him to know that, okay?
We'll keep it a secret. He'll
okay,
never know.
Good,
He'll never know.
Good.
All right. In terms of the conference, you did mention to me that you're back-to-back meetings while you're here.
Yes, I'm very pleasantly surprised with the attendance this year, and Earthstone is a small public company, and we've just had a very nice response, even in this low oil price environment, of people that are talking to us. So that's very good.
It is exciting, but I understand part of that might be because you have quite a management team, and your team's been through a lot together. You've created 4 successful public entities. How does your familiarity and experience with each other benefit the progression of Earthstone? Because you mentioned to me earlier, you said when you make money, people like you.
Yeah. Well, so the senior management team has been together for 13 to 25 years, depending on the person. We also have a pretty cohesive shareholder base and people that have been with us. The Vlasic Pickle people, for example. Vlasic, they haven't owned that company in a long time, but they've been investors for 27 consecutive years with us this year.
And they make a delicious pickle.
Oh yeah, they do too. Mr. Vlasic will like hearing that. But so we have a cohesive investor base, and we have a cohesive group of senior managers that are all investors in the company. So we've been through these ups and downs through multiple entities. We have a diversity of technical experience, engineering, operations, land, accounting, administration, finance. And fortunately, over the years, we've learned how to all pull in the same direction, which is very important in this low price environment.
Important and also wonderful, because so many times people aren't pulling in the same direction, and it's obviously been quite successful for you, and you enjoy working together.
Right. Sometimes, we're kind of like a family, and we tease ourselves
right.
that sometimes it's like a dysfunctional family.
Right.
Where we got to drag each other in a room and yell at each other. But I think that's a key thing. We don't spend a lot of time in meetings and so forth. We're all planning. When we need to, we get together and thrash things out, and everybody is making money focused, doing things the most efficient way possible, and making money. And that's what you have to do. And in this environment, it's particularly important. Maybe you're not making as much money as you can, but you can reduce those costs, which is very important.
Very important. All right, you're here from Texas. Let's talk about the Eagle Ford. What placed your focus on the Eagle Ford?
Well, this is kind of a unique situation. When we sold Geo Resources to Halcone back in 2012, this Eagle Ford position, we actually created it at Geo Resources, so we know it from the ground floor up. And Mr. Wilson, he had a non-compete situation with BHP, and he had to sell this asset, so we actually bought it back.
Okay.
So the benefits are for the Eagle Ford, in the current environment in particular, is that the markets tend to think that the Eagle Ford, perhaps along with the Delaware Basin and perhaps emerging plays in Oklahoma, are the higher return basins, okay? So having an Eagle Ford presence, I think, resonates well in the public markets. The second thing is our position's about 2 hours from our Houston office. So when we got to go out there and maybe kick people around a little bit, we can get there pretty fast.
Pretty quickly,
okay?
yeah.
Thirdly, the infrastructure is there in terms of getting gas to market and getting oil to market. So it's just worked out to be a good major step for us early in the life of Earthstone here.
Excellent. All right, now in your presentation, you talked about acquisitions, and you said you'd like to acquire another core drilling area in the Bakken, Rockies, or West Texas. So what will be the deciding factor in your next acquisition?
We actually had a lot of questions about that after my presentation and in the breakout room. And I think first and foremost, value. is going to be a determining factor. I think secondly, an area where there is infrastructure, like I mentioned in the Eagleford position. Third, I think where we have both the operational and the geological and land experience to capitalize on the opportunity. And then fourthly, the consideration in the public markets. We're not going to go out there and do a deal that the public market is going to question our sanity on. We're going to go do a deal that complements our other holdings quite nicely. I mentioned that our shareholders have been with us a long time. We're all big shareholders. So we like having some diversity in our portfolio. It's served us well in the past. We believe that having some level of diversity creates a preservation of capital. It minimizes the downside risk and gives us exposure to sizable equity rates of return. So it's both a protection on the downside and a achievement of good returns approach.
All right, I like that approach. All right, let's talk about reserves. In 2014, Earthstone doubled its proven reserves on a year-over-year basis. So how did the company actually achieve that?
Well, if you look through our materials and what we've accomplished here and what we've accomplished in prior entities, we basically are always running parallel paths. We are growing organically through our drilling efforts and in grassroots leasing. We try to be very active in the acquisition markets and the M&A markets in terms of merging with other public companies or private companies. So last year, we did all three. We bought some properties, we drilled some properties, and we reverse merged our operation into Earthstone Energy, which got us public.
All right. Drilling plan. Earthstone brought 21 gross wells online in 2014 and 9 in the second quarter of 2015. You said you have 10 gross wells expected to come on production in the second half of 2015. Can you talk about the drilling plan for the rest of 2015?
Well, I think really, or maybe we didn't characterize ourselves properly. I think we do have 10 wells that we're going to drill in the second half of the year, and they're all going to be Eagleford wells. And some of those, the completion operations, the fracking, will be deferred into 16, but we have 5 or 6 wells ready to be fracked. So the population is not identical. We'll drill 10 wells and we'll frack 5 wells, some of which have been previously drilled. We're going to drill an Austin chalk test in January or February, and that's going to help us capture, if the program really works like we think it is, going to help us capture a lot of acreage very economically in this price environment. It's our intent, and there were questions about this in the breakout room, it's our intent to run one rig consistently across our position all throughout the remainder of 15 and all throughout 16, but of course that could change depending on where prices and costs are.
All right, let's head into that breakout room. I'm curious, were you surprised by any of the questions, or what were a lot of people really interested in asking you about in the breakout room after your presentation?
Well, I think it's really what you're, I was really pleased because a lot of the portfolio managers know us from private entities. We're just a tiny little company, and we've got 11 research analysts following us, okay?
Wow.
So what I was really pleased about, there seemed to be some clarification questions as to how we're drilling, what our practices are, how we're bringing them on production, running a rig, what's our view. And given that I know a lot of these people very well, they said, well, what are you going to do in 16? I said, heck, I don't know. Give me a price deck. Tell me what the price is, and I'll tell you specifically what I'm going to do. Okay. But I think the flattering and the real pleasing part was that the quality of our operations, our financial stewardship is accepted. So there was a lot of discussions, I think, sharing back and forth what our opportunities might be in acquisitions and in M&A activities, and that was it. So I was pretty pleased with the turnout, and thankfully we received some compliments, and I told everybody we're a growth story, not a deleveraging story.
One last thing. I'm surprised. I'm interviewing a lot of CEOs, presidents of companies, chairman of the board. the optimism here is really impressive. You know, I mean, we're in a downturn and people here are very positive and very optimistic. Now, I don't think you get to be the president of a company, the CEO, by not being optimistic, but I'm surprised at how positive everyone is.
I've mentioned of the Vlasics on several occasions. I got a call from one of them and recently, and they said, he told me, he says, you know, in this environment, he says, you've got to be a cheerleader. You've got to motivate the staff. You've got to talk to the investors. You've got to be a cheerleader. He says, so when oil gets to $75 again, you can go back to being your cranky old self. Is what he said. But for right now, be a cheerleader.
That's hilarious. Well, I got a kick out of our interview, so I really enjoyed it. Thank
My
you
pleasure.
so
Thank
much.
you.
I'm Angie Austin with Oil and Gas 360, and hopefully you just enjoyed, because I did, our interview with Frank Lodzinski, President and CEO with Earthstone Energy Incorporated. He's enjoying the cool weather here in Denver, coming from a much hotter climate. Thanks so much for joining us this morning at the 2015 Enercom Oil and Gas Conference in Denver.